Hello, ladies and gentlemen. I'm so excited to welcome you all to another promising edition on the Forex Morning Mastery. In fact, our first edition for the week. It's a top of the morning from this part of the world, and depending from whichever time zone you're tuning in from, good afternoon and good evening to you. First of all, I would like to appreciate every single one of you for being on standby, waiting for me to come online. In fact, I had to sort out some personal issues, which, if I don't do so, it will affect the session. But thank goodness I've got this sorted out, and thank you for bearing with me. My own name is Sharif Daramola, as always, and I'm so excited to welcome you to another promising edition. And for the next 40, 45, 50 minutes, I am going to be your host as I take you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using our basic tools from the economic calendar to trend lines, key levels, and of course chart pattern, which will help us to unravel the potential trajectory for price action today. And while we prepare for both the London and New York session, it's important that we also become aware that there is a public holiday today. So the banks in the United Kingdom and the United States will be on close due to the UK spring holiday, and of course the Memorial Day bank holiday in the United States. And of course this could has its own effect in the market. Subdued trading activities is expected, low liquidity is expected, and we may likely see an extended sideways trading activities due to this low liquidity in the market. And of course we are going to be taking all of this into consideration while reviewing the current market dynamics. So for this week, last week was quite impressive. We did very well across the asset we are monitoring, and in fact one of the most profitable assets on our watch list for last week was the XAUUSD, where we were able to scoop in over 1,300 pips in profits, maximizing both the bullish and the bearish opportunity. And for those of us who were part of this profitable journey last week, well done to you, and kudos for being faithful to our analytical approach. So for this week, we are going to be reviewing the same financial instrument, that is the US Oilspot, the GBPUSD, and of course the XAUUSD, my favorite amongst them. And let's see if we can actually replicate the success we had last week. Now, I know that some of us will be joining us for the first time. I'm very excited to have you around with us this morning, and I do know you will be wondering what this is all about. What is it really that we do here on the Forex Morning Mastery? Well, first of all, I would like to state that I usually share a couple of videos during the course of the weekend which details and highlights what my thought process are on any particular asset I'm going to be looking at for the new week. Now, to follow up on these videos I shared during the weekend, the Forex Morning Mastery was born, and as technical traders we gather here 3 times in a week, Mondays, Wednesdays, and Fridays, to as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and New York session. And it's also important to also note that this is not a signal service platform, but instead it's a platform where we come together to engage and have a deep understanding of how market participants are behaving in the market, looking at things from the lens of price action and fundamental analysis. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand my analytical approach and eventually be able to utilize that information you gather on this platform to enhance your own trading decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. And also, if you have found this content helpful and useful in making your independent trading decisions, do not forget to give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the community to grow in such that the algorithm sees this video and pushes to a wider audience of traders who may find the content beneficial. And thank you very much as you do so. So with that being said, we will be diving right into the business, and as usual, the first exercise or routine we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And based on the asset we are looking at, we usually focus on high impactful events from both the United States and the United Kingdom economic docket. However, today, Monday, May 27th, we do not have any high impactful event to look out for. And in fact, I went further to include the mid-tier economic features, but unfortunately, we do not have any economic features to look out for from both economies. I will suspect that maybe this is due to the public holiday they will be having in these respective economies. So what this simply means is that we will be relying on our technical skills to understand the behavioral pattern in the market, and of course use that historical data to strategically position ourselves for the next move. And also we will also consider the fact that there might be low liquidity today due to the holiday, the bank holiday from both the United States and the United Kingdom. I see your comment, Sheriff Abdul Kadri. Good morning to you. I'm happy to have you around and glad to hope you had a wonderful weekend out there. So with that being said, here we shall be diving right into the business, and as usual, the first asset we normally look out for is the US Oilspot. And what an interesting situation we have in the market since this new week began, especially following last week's trading session where we did capitalize on both selling. It was more of selling opportunities last week, if you remember, and during the midweek we had the privilege of joining some buying opportunity, I think from this area, from the $77.20 level all the way into that $78.60 area before that decline again happened following the hawkish remark from the Federal Reserve's meeting that suggested that interest rate might be kept higher for an extended period of time. Now, before we go into the details, the technical details on this chart, it's important for us to also keep tabs with the various factors behind the scenes that is influencing the sentiment in this particular market. Well, this morning, when the market opened this morning during the Asian session, we saw a hedge in price as price was finding some deep buying, which I think is bolstered by the rebound in the overall market risk appetite following the Fed's hawkish remark during the later part of last week. Then another factor that we would like to take into consideration that will be affecting the trajectory of price action on the US Oilspot is the renewed geopolitical tensions in the Middle East. Yesterday we had about the attack on Tel Aviv, where the is it the Hezbollah or the Hamas militants attacked the Tel Aviv yesterday, and we saw a counter attack by the Israeli this yesterday night stroke this morning, and in fact this renewed escalation in geopolitical tension may likely incite fears of oil disruption from this particular area. So we are going to be considering that too as well. And of course, last week's statement from federal officials who indicated cautious approach towards potential rate cuts. Remember, we've been talking about this rate cut for over a year now, and in fact, there was this expectation that there will be 3 interest rate cuts for this year, but due to the high inflationary pressure in the United States and of course resilient economic data, this has been pending and we keep on pushing it back. However, in the last 2 to 3 weeks, the data from the United States wasn't that impressive, and it culminated with a CPI data that came in below expectation last week. And of course, with that, everyone was considering that interest rate will be reduced anytime soon. But the Federal Reserve officials have went further to say that they will still need some evidence that inflation will eventually decline to its target of 2% annual price growth. And you know how elevated interest rate affects the US Oilspot. The US Oilspot is a US dollar denominated commodity, and whatever happens to the US dollar has and usually has an influence on the US Oilspot. Now, how is that possible? I've always talked about this, but let's revisit it for the sake of those who are joining us for the first time. Now, if the interest rate is high, what happens to the US dollar? The US dollar's value continues to rise because of that interest rate, because when interest rate is high, investors keep on pumping their capital into that currency asset due to that differential value they stand to gain from a higher interest rate, and this results into high demand of that particular currency. And when demand for the currency gets high, our simple economics tells us that price will continue to rise. And when the value of the US dollar rises, it becomes very expensive for other currency to buy the US oil spot, hereby resulting into a decline in demand for the US oil commodity. So this is one factor that could limit the upward trajectory of the US oil spot. So we still have some couple of speeches coming up later this week, which majority in the market will be looking at to understand the monetary policy of the United States. Then adding to this market dynamic is we had this morning Iran's new economic council led by the interim president has approved a plan to increase the country's oil output from 3.6 million barrels per day to 4 million barrels per day, and this development could introduce additional supply into the market, adding a bearish element to price action. And as we navigate these factors, it's essential to remain vigilant and adapt to evolving market conditions, which obviously will reflect as on the chart as price action. So with that being said, here we will be diving right into the chart, and let's look at things from an holistic perspective. So our first point of contact today, I think I started on the 4 hours time frame, I guess. Hold on a second. I think we started on the 4 hours time frame. And here on the 4 hours time frame, after taking into consideration the character of price action since the beginning of the month of April, that's about 6, 7, 8 weeks thereabout, it is quite clear that the market has been on a strong bearish note. And after connecting the series of lower highs, as you will see, we have the resistant line of a descending channel, as you will see right here. And when we connect the series of lower lows, we have the support line of that descending channel, and price has consistently and uniformly stayed within this channel to emphasize the strength of the sellers in this market. Now, Will the momentum continue? Will price continue to trade within the descending channel? Well, after looking at the structure closely this morning, I begin to notice that sellers are not likely going to continue that momentum within the channel. And why did I say so? Now, if we look at what has been happening here since the month of April, look at the support line of this channel. Look at it here. Price tested it, and we saw an upward trajectory. The same thing also happened at the beginning of this month. And since this month began, you would notice that despite the series of lower highs, price action is yet to find a lower low. As you will see, that area between the $77 area and of course the $76.15 level had become a platform for buying opportunity, and every attempt by sellers to break through the structure has been met with strong resistance from the buyers, hereby making it difficult for price action to come back to test the support line of this descending channel. And for me, this could be a red flag that buyers are gradually gaining momentum behind the scenes. Now, in addition to this observation, we need to have a key level that will be serving as a yardstick guiding our trading activity for this week. And looking at the structure closely, I was able to identify a key level around that psychological price level at the $77 area. And in fact, if you look at this level closely, you can see that since the beginning of this month of May, this area had played a significant role in determining the direction of price action. Now look at what happened here at the beginning of the month. It was more of a buying niche, as you will see, though we had a breakout at some particular point in time, but price action immediately climbed back above that area. So it has been serving as a support line through the major part of this month. And we had the breakdown here as well. You can see price climbed back up again, and not until last week we finally saw a breakdown retest of that particular structure. And during the second half of last week, what did we notice? Price action gradually came back into that key level around the $78 area. So this level here has significantly played a major role in determining the direction of price action. Now the question at this point in time is, will price break out of the key level to inside buying opportunity, or are we going to continue to see selling pressure below the structure to incite bearish signal? And that reminds me, for those of you who have been with me for a while now, you know how important our key levels are, as they play a major role in guiding our trading decisions for every week. Now, what do I mean by that? When price action trades below our key level, we look out for patterns and structures that supports the idea of selling, and we are not going to be buying unless price breaks out and retests that key level. Now, if we look at this whole structure here, you will see that that key level is sharing a beautiful confluence with the resistant line of that descending channel. So will price break out of both the key level and the resistant line of that descending channel to incite buying opportunities, or are we going to continue to see selling pressure below the structure to further emphasize the strength of the sellers, inciting a sell-off in this particular market? Now, to answer that question, we would like to scale down to our execution time frame, which is the 1 hour time frame, where we want to see how the market has been reacting to this key level since the beginning of the weeks. And of course, this will be giving us an insight into where price is likely going to be heading to, at least for the first half of this week. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. So I'm right now on the 1 hour time frame, and after observing the character of price action since the beginning of this week, it is quite clear that there is an indecision in the market at this point in time. If you look at the structure closely, you will notice that since the week has begun, price action has been confined within the $78 level and the $77.70 area to emphasize the prevailing uncertainty in this particular market. And you know how we do it in this community. Whenever we identify a range bound structure, we want to exercise patience and wait for the market to finally make a directional decision, which will either come in the form of a breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. So for today's trading activity, our center of focus is within that range bound structure that is between the $78 price level and the $77.70 area, where depending on the direction of the breakout will give us an insight into where price action is likely going. So placing our stop orders at both ends made quite a lot of sense, waiting for that signal to come in. And trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give us updates as at when due. So I've positioned myself strategically using this current structure we have on the chart, and I do hope you will do the same. And of course, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, we do want to be having a well-defined risk management strategy in place. And for the buy and sell position, we will be looking at a stop loss. We want to have a wide stop loss here to capture this range bound structure. So we'll be looking at a minimum of 35 pips stop loss on both positions. So calculate this accordingly using your position calculator to align with your risk appetite on your portfolio. So this is my simple view on the US Oilspot for today's trading session. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions whatsoever before we move on to the next financial asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Stay tuned in, guys, and do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decisions. Why not give the video a thumbs up, and thank you very much as you do so. See you in about 15 seconds from now. All right, so I can see a bunch of comments here from okay, I saw you, Sharif Abdul Kadiri, my namesake. I see you, Ogunlano Odunayo. Good morning to you. Thank you very, very much. I also wish you the same, and I'm very glad to have you around with us this morning. I see you, Veg Food Lover, BLR. Good morning to you. Well, I'm doing very fine, thank you, and trust you are doing very well. Chris Bernard, Football Channel, good morning to you. Oh, you're new with us. Glad to have you around. I'm glad you find the content helpful and useful for your trading decisions, and I do hope you've clicked on the like button to support the channel, and thank you very much as you do so. So glad to have you around, Chris Bernard, and looking forward to seeing more of you. So I see, okay, Ogulano is asking a question here. We're still hoping for more bearish buyers for XAUUSD this week. Well, of course, we are going to be looking at the XAUUSD in a moment, so I hope you stay tuned in so you can see what we have on that particular asset. And of just saw that I lost connection live. Please let me know in the comment section if you can see me, you can hear my voice loud and clear. We'll be very grateful, so that if need be for me to do any adjustments in that regard. Okay, I think I'm live back on. Okay, all right. So the next asset we are going to be looking at this morning is going to be the GBP USD. That is the British pounds against the US dollar. And in fact, for those of you who are with me on both my TradingView and Telegram platform, you must have gotten a position triggered at this point in time, as I did give a commentary this morning on what we will be looking at to capitalize on trading opportunities this morning. So before I go into the details on the GBPUSD, I will not be doing a top-down analysis on this asset, basically because I already shared a video during the course of the weekend giving you a top-down analysis and of course taking you through my thought process as regards to what I'm expecting on the higher time frame. So we are going to be focusing on the 1 hour time frame today. And if you in any way missed out on my weekend videos on the GBP USD, kindly check the description box in the current video to refer yourself to that video. There is a link right there. Just click on it and it will take you right to the GBP USD. Yes, I see you favor Shiplani. High, low, long you are trading. I'm not high. How long you are trading? Okay, all right. Well, I've been trading for over 8 to 9 years now, ever since I retired from my banking job in 2018, though I've been trading proud to leaving my banking job back then. So that's how long I've been trading. So Ogunlana Odunayo says we lost you for him. Yes, I'm aware of that. So I was even asking if I'm back on live. I had some internet issues there, but I think it has been sorted out at the moment. So I hope you can hear and see me. You can hear me and hear my voice clearly and see me and see my screen. All right, so back into the structure. So on the GBP USD, we have quite an interesting situation in this market. Remember last week it was more of a choppy market condition, though we saw price break out of that 1.2700 area at a very important key level for those of you who saw my weekend video on this particular asset. And due to its importance and significance in the past, we are using that 1.27 area as a key level to guide our trading activity for this week. And of course, after price has broken out of that key level, we saw a very choppy market condition. As every point in time we buy, price kept coming back into our entry throughout last week trading session. In fact, we had a little bit of a breakdown here, evolving into a reversal pattern in the form of a double bottom structure, where that key level served as the neckline of that reversal pattern. And of course, we saw the breakout of that reversal pattern on Friday to validate that double bottom structure, leading into a strong impulsive move right into the 1.27440 area. That's about 45 pips move thereabouts. Now, since the new week has begun, we've seen a choppy market condition where, though the week has started on a bullish note in continuation of the trend from last week, however, you would notice that price action has been confined within a range that is between the 1.27440 area and the 1.27290 level, to emphasize the prevailing uncertainty in this particular market. And of course, you know, whenever we have a range bound structure like this, we want to exercise patience, waiting for the market to make a directional decision, which will obviously come in the form of either a breakout of the resistant line of the range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. And from what we have here since the beginning of this week, it is more of price action tending towards the upward area. As you will see, the lowest point price action, the lowest point for price action this week is the 1.27290, which is the support line for this week. And the next attempt by sellers to come closer to the support line resulted in series of higher lows, as you will see here, giving us signs that buyers are gaining momentum despite the public holiday. Now, with the situation we have here, I already have a buy position triggered at this point in time, and in fact we've had a choppy scenario within the resistance line here, at least in the last 3 to 4 hours, giving us an insight into the indecision in the market. Though I'm not surprised at this. Remember, I mentioned earlier that today we are having the UK spring bank holiday, which obviously makes the London market closed at this point in time, and we may likely see subdued trading activity due to low liquidity, and this could result in extended sideways trading activity, like I said earlier. So we already have a buy position triggered. Let's see how the market is going to play out going forward, and of course I will be giving you updates on both my Trading View and Telegram platform. And if price continues to climb, I do have another buy stop order at the 1.276, the highest point in the last couple of months. If price goes ahead to break out of that structure, we have the privilege of maximizing the potential of that bullish move. Now, in as much as we're looking out for buying opportunity, you know, the market can do whatever it wants, and we in this community always be on standby to capitalize on whatever trading opportunity the market presents to us. So if it so happens that we get taken out of this current buy position in a loss and price continues to drop to the downside, a breakdown retest of the 1.2729 will welcome selling opportunity. And in fact, I'm of the opinion that if price breaks down that support line at the 1.27290, we may see price action drop into the neckline of this double bottom structure I showed you earlier on. So remember, I said we had a double bottom structure here, which is a strong reversal pattern from a technical standpoint, and we may likely see a situation where price will come back, retest the structure in an attempt to continue the uptrend scenario. So if price drops below the support line, which I doubt will happen due to the momentum we are seeing this morning, as soon as price gets close to the neckline at the 1.27, we move our stop losses, secure the position while we wait and see how the market will react to this area. A breakdown retest will welcome more selling opportunities, and the emergence of buy pressure around the 1.27 area will incite new buying opportunities. So let's see how the market will play out. I think in the next 3 to 4 hours we should be able to move our stop losses accordingly to secure the current buy position. So at this point we have a buy position triggered at this point, and let's see how far this momentum will go. Will it continue to the upside, or are we going to be taken out of this position? Let's wait and see. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And for those who had clicked on the like button, thank you very much for doing so. And for those who are yet to do so, please do. We have over 14 people on board and we have 8 likes. Please, let's make the likes tally with the number of people on board, and thank you very much as you do so. All right. So I see your comment, Favor Shipalani. I hope I pronounced that correctly. Don't mind me if I didn't. You said what books you have in order to know how to trade. At this moment, if you're a beginner, I would suggest that you read this book from Michael Douglas, Trading in the Zone. Very good book and very insightful. At least um, it will enlighten you um, on the nitty-gritties in the forex market and help you to most importantly, we should all understand that forex trading is more of psychological, and 99.999% of trading is more psychological rather than analysis. And most of the time, we as human beings, due to the fact that we all have emotions, we find it difficult managing these emotions during especially when our positions are being triggered. And one of the ways through which we try to manage our emotions is by having a definite trading plan, which is very key. Trade your plan accordingly and do not break your rules. And these are ways through which you can manage your emotions. And one book I can say that can help you in understanding this nitty-gritty is Michael Douglas' book on trading in the zone. Please, you can check that book out. At least for now, that is one book I will suggest you read. Favor Shipalani, I hope that was helpful. All right. Who else is here again? Okay. Or do I? Okay. I'm very okay. You're welcome. I'm glad you back on. Who else do we have here again? Okay. All right. So, in the absence of no questions, I want to assume that we are all on the same page right now. And in that I do hope you've marked out these levels accordingly on your charts. Please do. Very important, as it helps us to manage our independent trading decisions today. So with that being said, let's dive right into the final asset on our watch list for today. Stay tuned in, guys. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, we have an interesting situation going on at this particular point in time. If you saw my commentary this morning, you must have had a buy position triggered at this point in time, and I do hope you have your well-defined risk management strategy in place. Please note this is very important. Every trade we take must have a stop loss and TP target, because no one knows where the market is going. All we are only doing is use our hedge in making well-informed trading decisions. So at this point, okay, let me re-emphasize again. I already done a top-down analysis on the XAUUSD during the weekend, and I will only be focusing on the 1 hour time frame, which is our execution time frame. Now, if you had missed out on my weekend analysis on the XAUUSD, please go ahead and check that video. The links are right in the description box of this current video you are watching. Check it out after the live session. It will help you in understanding the market dynamics of the XAUUSD, and of course you can use it as an educational tool in understanding how to use price action in unraveling the dynamics on a current market structure. So with that being said, here let's dive right back into the business. So last week was one of the most profitable weeks for us on the XAUUSD, as we were able to scoop in over 1,200 to 300 pips after capitalizing on the initial buy position at the beginning of the week. And last week Wednesday, following the hawkish FOMC meeting minute, we were able to capitalize on that strong 820 pips move all the way to the downside, giving us a significant amount of profit. And for those of us who are part of this profitable journey, once again, I congratulate you and kudos to you for staying faithful to our analytical approach. And for those of you who watch my weekend video, I was saying in that video that we begin to notice a rebound in the XAUUSD last week Friday, following the retail sales data from the United States, which actually came in beyond expectations. And of course, we saw buy pressure resume around this particular area, as you will see. And one of the things I also emphasized during my video was the fact that after taking into consideration this strong impulsive bearish leg and seeing how price action transition into a consolidation phase, that we might likely see this whole price movement evolve into a downtrend continuation pattern, maybe in the form of a bearish rectangle or flag pattern, or even a pennant, where the breakdown of the 2,325 level, which happens to be the lowest point in about a month, to incite selling signal. And I also emphasize that in as much as this whole structure is looking bearish, we cannot ignore the potentials that buyers too can also come in, where this whole structure could also transition into a reversal pattern, maybe in the form of a double bottom structure, where the breakout of the 2,350, remember the 2,350 is our key level for this week, and you know how we use our key level. When price breaks out of the key level, we want to be looking out for patterns and structures that supports the idea of buying. And in fact, with the way things are going this morning, I'm of the opinion that we could actually capitalize on the momentum even before the breakout of the resistant line of that range at the 2,350 is broken, or the support line at the 2,325 level is broken to the downside. Now, with the situation we have here, and after understanding the holistic perspective into this market, it's also important for us to understand what is really influencing the sentiment in this market. Now, the new week has started on a bullish note, a positive tone, as we saw deep buying activities happen during the Asian session, prompting speculation about a potential rebound in gold prices. And of course, considering the long bearish momentum last week, we might begin to see the initial phase of a retracement move of that impulse leg. So this move might not necessarily mean that price is going to continue to the upside. It could turn out to be a retracement phase in anticipation of a downtrend move. So in the meantime, the bullish traction we're seeing here could be considered as a short-term trading opportunity. So another factor here that is influencing the price of gold is the softer US dollar and renewed geopolitical tensions in the Middle East. I talked about this earlier, talked about the recent attack in Tel Aviv by Hamas, and of course the retaliation by the Israelis also through yesterday evening stroke this morning could further escalate this geopolitical tension. And of course, during era of geopolitical tensions like this, there is always this increased appeal for safe haven assets such as the gold. And in this uncertain situation we are looking at here, we may likely see a pump in buying of gold prices. Then looking beyond all of the geopolitical tensions in the Middle East is the increased demand by central banks in boosting their gold reserve. I talked about this a couple of weeks. I've been talking about this for a couple of months now, that China for the last 19 months have been strengthening their gold reserve. So they've been buying gold month in, month out. Last month, they bought about 16,000 troy ounce of gold, which is quite tremendous, and this has been consistent for the last 19 months, and this has further escalated the price of gold. Most of Euro-Asian countries have been buying gold from Turkey, Russia, India, Kazakhstan. most of them have been buying gold in recent times, and this has further escalated these prices. And I still think that with this whole development, we might be seeing an opportunity to buy gold at this point. Now, another thing that could limit the upward trajectory of gold is the recent indication of lower expectation for a Federal Reserve rate cut this year. Now, despite the not too impressive data from the United States in the last couple of weeks, only last week we begin to see some renewed resilience in the US economy. But prior to last week, the data coming in from the United States hasn't been very impressive. And to culminate that, the CPI data came in below expectation, prompting the idea that we may likely be seeing interest rate cuts anytime soon. However, speeches from the Federal Reserve official throughout last week stated otherwise, as most of them are leaning towards a wait-and-see approach, looking for further signals that truly inflation is thinning out. So that means that interest rate will be kept higher for an extended period of time, and when interest rate is high, the value of the US dollar continue to increase, the US Treasury bond continue to increase, and we know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing very well, it is expected that the US dollar too will do very well. So this for me is the only factor that may cap the upward trajectory of gold and increase the value of the US dollar at the same time. So with this whole information here, how is the market going to be digesting these dynamics? And of course, we will be seeing that reflect on the chart as price action. Now, another thing that is worth noting at this juncture is the possibility of a subdued trading activity today due to the observation of the Memorial Day bank holiday in the United States. And you know how the United States dollar is directly proportional in value to the US dollar. We might see a range-bound trading activity today, so we should take that into consideration while we monitor price action. So with what we have here on the 1 hour time frame, it is quite clear that the week has started on a bullish note. Price action started the week around the $2,332.50 level, and since then it has consistently and uniformly found higher highs and higher lows, as you will see here. And I did updated us this morning in my commentary, giving us a range bound structure where price action was confined. For the first 6, 7, 8 hours, price action was confined within the $2,340.50 level and the $2,332.50 area, to emphasize the prevailing uncertainty at that point in time. And you know how we use our range bound structure whenever we identify this simple indecision going on in the market. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. And as you will see, since the week began, price has not made any attempt to break down the support line, further emphasizing the strength of the buyers in this market. And if we take it a step further, you will see that since last week trading session, we have a series of higher lows here, giving us a beautiful ascending trend line to work with for this week. So let me draw this correctly. I think if we bring back our okay, beautiful. I think this lines up very well. I would like to thicken it a little bit to emphasize its importance at this juncture. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that supports the idea of buying. And the only condition that will make us sell is for this ascending trend line to be breached and broken to the downside. But as it is right now, the momentum is still above the ascending trend line, so we already have a buy position triggered after price breakout retest that resistance line at the $2,340.50 level, and I hope that this momentum will continue to the upside. Now, for those of us who had already capitalized on this opportunity, you currently will be having about 50 pips running in profit at this point in time. So I encourage you to move your stop losses right now to break even. Let's secure this current position as we continue to monitor price action. And if price continues to climb and find new highs, we have another stop order above the $2,350 level, where we want to maximize the potential of this uptrend move. In fact, I will feel very comfortable in this bullish momentum if price action ever breaks out of that $2,350 area. Remember, that level is serving as our key level for this week, and it's also going to be serving as a neckline of a potential reversal pattern around this particular area. So at this point in time, I encourage you all to move all your stop losses. Let's secure this current buy position by moving it to break even while we continue to monitor price action. Now, in as much as we're looking at a bullish potential in this market, we cannot ignore the strength of the sellers as well. Remember, throughout last week, it was more of selling the XAUUSD, and the momentum may likely continue to the downside. And if it's so, what are the conditions we want to see on this chart that will make us feel comfortable joining a bearish move? Well, I already had a sell stop order below the range, but the support line of that range bound structure here, and I already have another one at the lowest point here in the last 1 month. That's a 2,325 area. However, I still think that we can be able to join a bearish move even before the breakdown of the structure happen, after considering the importance of this ascending trend line that we have here. Now, if this ascending trend line can be breached and broken to the downside, I would like to see some confirmations, like a retest of structure, to give me a good opportunity to join the decline to the downside. So this is what I will be looking out for to sell the XAUUSD today. So mark out the trend lines on your chart. Very, very important. They will be playing a major role in guiding our trading decisions for today. And please do not forget, move your stop losses accordingly on the buy position that we have right now. So I'm trying to do the same on my own account at the moment, so please give me a couple of seconds. So we move it to break even. All right, 965. So move your stop losses accordingly. Very, very important while we continue to monitor price action. And that reminds me, the XAUUSD live monitoring window is coming up later today, 5 to 10 minutes into the New York session. I'm even doubting if I should come on live today due to the observation of the Memorial holiday in the United States, where trading activity might be subdued. And let's see, I will come on live during that time, 5 to 10 minutes into the New York session, and let's see how trading activity will be like, and depending on the volume of trading activity will tell how long I'm going to last on that particular session. So the link to that session will be seen immediately at the end of this live session. So click on that link, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And please do not forget, please give that video a thumbs up. We have over 20 people on board this morning. That's quite impressive. I'm very glad and excited about this. I love the energy this morning. Please, let's make the likes tally with the number of people on board. So if you are yet to click on that like button, this is the cheapest way you can actually support this community to grow. By clicking on the like button, it prompts the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. And for those of you who had clicked on the like button, thank you very much. I'm very, very grateful for your support. So let's see if we have any questions whatsoever before we start rounding off on today's Forex Morning Mastery session. See you in about 10 to 15 seconds from now. Cheers. All right. So I see, okay. So I see you, Favor Shipalani says S&P 500. What is your analysis? Well, I guess you're new with us. That is why. So I can only take on 3 financial assets for the Forex Morning Mastery. Do I have other assets I run behind the scenes? But for the Forex Morning Mastery, I can only take 3 financial assets due to the limited time I have. So please bear with me on that one. So I will not be able to take on the S&P 500. Now, Chris Bennett says, do you give free signal or paid signal? Are you always here every morning for trade analysis? Well, I don't do signal services. I don't have a signal service platform, but instead what we do here is for us to come together to try to understand the behavioral pattern of market participants through the lens of price action and fundamental analysis. So that is what we simply do here, and this happens 3 times in a week: Mondays, Wednesdays, and Fridays. Now, for daily follow-ups on this asset, I do this on my TradingView and Telegram platforms, so you can see the link right in the description, on the link in the description box below. And of course, you can see some wording scrolling at the bottom of your screen. That's my user ID on the TradingView and of course on the Telegram platform. So if you're part of those sessions of that platform, you will see my regular updates on this particular asset we are monitoring here on the Forex Morning Mastery. Are you in a trade? Of course, yes, I am in a trade. Of course, I am in a trade. I just told you I was adjusting my stop loss earlier. So I see H3 channel. So are you selling signals, and can I keep in contact with you? No, I'm not. I answered that earlier. I don't do signal service platform. All right. So instead, we want to have a deep understanding of the market together, and let's see where and how we can capitalize on the next move. This is my own idea. All right. John Alabi, I am very glad to have you around today. Thank you very, very much, and God bless you too. I'm glad. I hope you click on the like button. Please do. I see you, Adeniyi Babalola. I'm still waiting. Oh my goodness. Yes, yes, yes. I will do that right away. In the next 5-10 minutes after the session, I will look at that and get back to you. I'm very, very sorry. I'm very, very sorry. I'll get back to you, okay? All right. So, in the absence of no further questions, I guess we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really, really appreciate you. I love the energy this morning, and I really appreciate the support you have given this channel so far. And I look forward to seeing more of you in our subsequent editions. So today we were able to take on the 3 financial assets we will be monitoring for this week, which includes the US Oilspot, the GBPUSD, and of course my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. And in fact, we were able to identify simple trading setups using our basic tools to unravel the potential trajectory for price action today. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And I do hope you marked out these levels accordingly on your chart, the levels we identified during the course of the session. Please do so if you have not, as they will be serving as a major tool in guiding our trading decisions for this week. And for those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us today. And I do hope you are able to gain 1 or 2 things from what we discussed during the course of the session. And if you did, you want to be part of the subsequent editions, Wednesday session 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for Wednesday's trading session. So it's on this note I would like to wish us all the best of luck today. It has been a wonderful moment, and looking forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window today. Do have a wonderful evening, everyone. Trade smart, trade consciously, and see you all on my social media platforms. Bye.